This Monday afternoon with breaking news on Wall Street, where stocks plummeted after President Trump said that those 25% tariffs he has been proposing on imports from Canada and Mexico will begin tomorrow. The Dow fell nearly 650 points today, the Nasdaq losing just under 500 points at the close, and the S&P 500 down 104 points. A nasty day on Wall Street today. Not great if you've got an IRA in there, or perhaps your 401k, probably not looking as good at the end of this day. Let's get some more context on what this means for investors and the economy. We're joined by David Quigley, an assistant professor of economics at the University of Texas at Arlington. Thanks so much for being with us, Professor.
Hi, thanks for having me.
All right, so let's start off with this. This wasn't, I guess, a tremendous surprise as we came into today, because these are the same tariffs that the president had floated out there about a month ago. He put it out there, said it was going to begin on a certain date. Wall Street saw this kind of day where it just dropped like a rock, and then he walked back from it and gave it another month.
That's right. There seems to be a lot of kind of false alarms with regard to when the tariffs would take place. And so you can imagine if you're trying to, invest or make business decisions, you have to count to, will this happen or will it not happen? And, different people can try to assess what the policy is going to be and reach different conclusions. And that just, causes issues in terms of, when the certainty comes around in terms of what the policy is going to implement. There's going to be a lot of reaction to it.
Yeah, and Professor, can you kind of explain what some of these big institutional investors, some of these big traders are thinking, and why we see such a down day like this? I suppose they're sort of baking in these tariffs coming in and what that is going to mean for the broader economy, whether that might slow the economy down. And of course, if the economy slows down, we don't sell as much, and therefore some companies don't do as well. They're just sort of trying to figure that out in advance, aren't they?
Yes, that's right. So the big institutional investors, right, it's going to have immediate impact because supply chains were designed around the idea of the USMCA, the United States, Mexico, Canada Trade Agreement, which had set a procedure for low tariffs, allowing businesses the certainty to make investments in both, Mexico, the U.S., and Canada, and design supply chains where products were going multiple times across the border until you get to the final finished good, right? So that means when you have tariffs that were unexpected and you have supply chains designed to cross these borders multiple times, that can, multiply the effect of tariffs, especially for specific businesses, manufacturing, agriculture, oil. Mm-hmm. So, obviously the hope for these investors were that there would be some last minute agreement, right? There was, I'm sure, plenty of people trying to bet that just like, a month ago, there would be some sort of last minute agreement, maybe some concessions that would permanently push off the tariffs, or at least temporary extend the deadline. But if that's not the case, right, then the effects on the supply chains will quickly become apparent.
All right, we shall see if there is a last-minute deal this time around, like we saw about a month ago. Again, Wall Street not liking what it sees today, though, and we'll see also what effect this has on prices for consumers if indeed those tariffs do stick. That could very easily be passed on for a lot of different products to consumers. David Quigley, assistant professor of economics at the University of Texas at Austin, thanks so much for being with us on this interesting day in the economy today.
Thank you.